The world right now is showing three signs which are very similar to exactly what happened before the Great Depression in 1929 and the dot-com crash of the year 2000, which means most experts around the world are expecting a major market crash to happen, and we need to look at the strategy of what investors like Warren Buffett are doing right now and copy that to protect our wealth. Well, I'll explain. The first metric, which is very similar, is a valuation multiple in the stock markets called the Shiller PE ratio. Now, whenever it goes above the point of 32, it means a major crash is expected. Exactly what happened in 1929 and the year 2000. And right now, this ratio is at 39, which is 23% higher compared to the previous benchmarks, which means it's extremely risky. Now, the second thing is actually this very interesting concept called the yield curve inversion. What does it mean? It basically means that, in the short term, when you put money in the bank in an FD, the bank gives you higher return compared to when you make an FD for a longer duration. Now, this seems very counterintuitive, but this is one of the best indicators available in the world economy today to be able to predict a recession. And this yield curve inversion is showing up in the US market since October of 2022 to December of 2024. Now, while it has normalized and become okay right now, most economists are expecting that 18 months from December 2024 is where the crash will happen. Now comes the third sign, which is concentration of valuation of the stock market index in a handful of stocks. And we're seeing exactly this in the S&P 500 or the US index, where out of 500 stocks, just 7 stocks called the Magnificent 7 AI stocks hold 47% the value of the index. And most financial analysts around the world know that AI right now is in a massive bubble, which means over the next 6 to 12 months, a major crash is expected and the US stock market may fall by 30 to 40%, which will have ripple effects around stock markets around the world, even in India. Now, in such a time, what is Mr. Warren Buffett doing? Well, right now, practically close to 28% of his portfolio is just in cash and bank deposits, which is the highest ever allocation he's made to such assets in history. Earlier, he would maintain his cash and bank deposit portfolio share to just about 10% because he's expecting a major crash, which is why I would recommend, you really need to look at diversification in your portfolio. Possibly have 20% of your portfolio in gold, about 20 to 25% in cash and bank deposits. And please diversify away from risky assets. A lot more explanation in the description. Share it with someone who may need it.